Good morning. It is January the 6th, 2017. Time to kick off another trading day. We always start with our disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed to benefit. From hindsight, no representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Don't you love our government oversight? They are everywhere, and a bunch of busy bees controlled by drones. So here we sit. Biggest news day of this month, unless something happens after the Trump inauguration, and the market is primed to trade higher. The expectations this morning are for 175K, 4.7% unemployment, 3% in wages. Work week 34.4. International trade minus 44.5. Factory orders minus 2.5. And Baker Hughes rig count last week was 815. That number could come in higher than forecast. The news focus, and you can get a whipsaw off of these two, will be non-farm payrolls and unemployment, followed by factory orders. And this number shows modest growth. This number shows economic contraction, but it's a number of factory orders that swings, so it's usually discounted. Right now, if there weren't news, we'd be selling 31s to 03s. That is resistance. Then 7 to 11. Given the structure, without news, the trade is to the long side. So the first trade would be 24 to 28, and then 17 to 21 for buy 2. But we do have news. Now, the way we recommend that you handle this is let the news hit the market, whichever way it moves. In this case, we'll say it moves up. The mode mean is the first place where you have a resting limit order. It's the first place to enter the market. Second place would be value area low if the market rallied off the news. And then the third spot would be where the news hits the market. You're pretty much guaranteed to fill here. Then if the market comes up and does not take out that high, exit the trade. That's trading technique style, requires some nimbleness. If you don't like that, the market, in this case, moves up. Then it'll come down and it'll find out where support is. Then it'll come back up and retest resistance. If that holds, it probably comes down, stops inside support, then moves into development. Then you can trade development. That works out pretty well too. The second one, trading development, does not require nimbleness, which is helpful for a beginning trader. Looking at the 30-year. Resistance 52.28 to 53 is number one. Sell 7s to 11s, number one. And then 19s to 23s, sell 2. Buy side, probably pretty good support, 16 to 21. Buy 9 to 13. Market is pointed higher. Buy 1. Buy 1 to 5 for buy 2. A lot of money's come in on the long side of the market since the middle of December. Can't fight the tape. Gold is off overnight, or it was when I looked at it a couple hours ago. We had an 83.85 sell yesterday. Or we were 84.86. 84.86 didn't make it. 83 held. Market has drifted lower. This market reacts big time to the non-farm payroll numbers. So the newsday trading strategy works well here too. But if there were no news, we'd be selling 79s to 81s, 84 to 86 for sell 2. On the buy side, 73, 75. Just leaning against support and resistance, and then 68 to 70 for buy 2. Resting limit orders, scoop orders, $10 away. Usually works in gold, but having said that, gold is very, very volatile. Sometimes it can move $25 off the snooze, which is fabulous if you're on the right side of the market, but not so much fun if you're on the wrong side. The euro is off overnight in anticipation of a strong non-farm payroll number. The yuan crashed last night. It had a very, very strong 2-day rally after the Chinese bank intervention. They did not intervene last night. The market went the other way. And we have, in our game, we have regular examples and reminders of what government intervention does to markets, does to everything. It screws it up. It distorts it. And there's a lot of money to be made if you know what the government's going to do next. But you can't trade without stops. Okay, we have a B pattern. Market is pointed lower based on our non-farm payroll number and unemployment number. Right now, if there were no news, we'd be trying to sell 625, 650. Be buying 106 and buying 575, but there is news. Okay, the market that has the least impact from this morning's news is crude oil. And the analysis is the same for crude oil. We traded higher. The big article that came out last night after markets closed was that Saudi Arabia was producing at their agreed upon level. And Saudi Arabia, the Gulf states, Kuwait, are expected to absorb the brunt of the production cutbacks, as is Russia. Russia has said that they would adhere to it. They were planning on cutting back over 6 months. We'll see if that happens. We'll also see if any of the others are adhering and following their production quotas. So, big time shorts, if you're not a hedger, we're always subject to news. And right now we have this spill from 54.75. This area right up here is where the move down started. We haven't gone back and retested that. That's certainly a trading target. But right now resistance is at 54.25. So sell one's 54.25 to 50. Then 54.75 to 55. There are stops above 55 on the buy side. 53 and a quarter, 53.50, and 52.75, 53 even. The E-mini was dead overnight. 50,000 contracts traded, not much action. The market is long. Large institutions, by definition, are long. And they've added to their positions, and they're sitting here and they're watching. So the market really is in traders' hands until the news changes. Everybody expects a Dow over 20,000. We've seen 21,000. Everybody expects the E-mini to make it at least 2,300 and maybe 24. So that's where we sit. But you can look at the overnight action, and there wasn't much. A scoop order, a limit sell, a limit buy, 10 points away from when the just entered just before the news hits. Usually it's a pretty safe order for the E-mini. People take profits at $500 and $1,000. Rarely will you see a 20-point move off of this news, but without news, we'd be trying to sell 65, 67, then 70 to 73s. On the buy side, trying to buy 59 to 61. Still looking at a very, very strong P formation. The bias is to the upside, 55, 57. These numbers are without news. Okay, it's going to take a while to get stuff written, posted, scattered around where I have to get it scattered around to. I will be back with you for the AM news. See you on the half hour.